And my children are on holiday, so I've told them I'll give them 2 hours of my time now, so that at least let me give them something. I was just there, I was just on my system. So yes, I know we need to learn this, but sometimes we just let's do this 1 hour, go and rest, then we'll go back. Before we know it, just gradually, consistency, like I like Richmond, what Richmond said though. He said consistency is the name of the game. He even said it, even analyzed it. Don't do two, it's not as if you're doing long hours in a day and you're not doing the following day. Just be consistent, just do a little every day, and before you know it, you'll be there. So Ezekiel, we are going straight to Liberty. They too, pardon us. They won, did finish yesterday, so we said they will just continue. So we'll go straight to Liberty. I like to say Liberty itself, Liberty strategy. We'll go straight to Liberty strategy. So let's go.
Good morning, everybody. Good morning. Yes. Please, I'm greeting you. Greet back. Good morning, everyone.
You can put in the chat box now.
Put it on the chat box.
And they are already put in the chat box.
Good morning.
Good morning,
I hope everyone
sir.
is good. Good morning. You can just type it on the chat box. I want to be sure you're ready. All right. Your journal. Where is your journal? Where is your journal? That's the assignment. Where is your journal? See that? It's a lot. All right.
My journal is there.
All right. Mr. Chidi, is that you? If it's you, please put it on the chat box. I want to know if you're the one. So let's do this. Okay, so welcome everyone on the call this morning. My partner, I see you. It was explosive yesterday. All my partners, team A, team B, I celebrate you. Please pardon me, for poaching. I'm so sorry. Okay, Mr. Chidi, you were with us yesterday. Good to have you. All right, so let's go into it. Liberty strategy. I have to stop sharing the screen right now. Please pay keen attention. Dr. Love, please. Auntie Shampepe, is she presenting as well? Let me time myself.
You can go and we can give her tomorrow, so that we spend the quality time learning this very important topic.
Okay, man. Okay. All right. Okay, so let's dive into it. Where is my trading view right now? Where are you, trading view? Sorry, don't mind me. I always have too many things open at the same time. All right, hold on a sec. Let me figure it out. Are you? That's not you. Okay, yeah. I think it's right here. Okay, so let's go. If you're ready, put ready. If you're ready, put ready. Today's session is like I put on the group. It's worth $2,000. It's gonna be a massive secret. So it's worth $2,000, but just take it for free. All right. Don't share with anybody that didn't join this call. They miss. So miss it, miss out. That's the game right now. All right. So welcome today. I'll be talking about liberty strategy. So Ezekiel Sunday is my name. Right. Been in the banking sector for about a decade, and I'm still consulting for Exim Bank on foreign trades. So trade is what I like. And let's see what we can do on the chat this morning. So we'll be considering one of our expert educator on our academy, Rich Bandega, on his own, strategy, his own liberty strategies, blueprint, that he used that blueprint to trade NAS 100. All right. I love to trade gold, but I love it volatile anyway. I don't know he's on the same boat with me. Who loves volatility? If you love volatility, put 111 on the chat box. Let's see how many persons love volatility. I don't like it slow. I like it pia 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 pia. Who loves volatility? Nobody. Seriously? Okay, don't worry. At least one person loves volatility, and that's me. Oh, Esther loves Mama, you love volatility. Okay. I have my paddies now. I love volatility. I love it. Pew, 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 and I'm out. All right. So that's why I love gold, and that's why I'm falling in love with NAS 100. Before now I was not ready for NAS 100, but now I think I'm super ready for NAS 100. And that's what this can do to you. So all the leaders connected, I celebrate you. Our chairman, our mentor by example, I celebrate you. Auntie Doopsy, I hope you're here. That's my grandma. All right, so let's go on Liberty Strategy by Rich Bandega. So
I'm
I've
here,
actually,
sir.
yeah, mama.
I
We'll
hope you didn't hear
compensate
me,
you
oh,
for
Auntie Jupe, I hope
staying
you didn't hear
awake.
me.
I didn't hear you.
We'll compensate you for staying awake. Sorry, ma. Okay, so let's go into it. For all the tools I need to work with, I actually have them on the screen. That's just me trying to see how I can manage time. So for Liberty Strategy, the the principality behind it is Rich Bandega, and he solely recommends Liberty Strategy to be used on NAS 100. So what do you do? First and foremost, go for your NAS 100. You just type NAS 100 on your trading view, right? See my trading view right here. If you don't have a trading view, assignment today, make sure you set up your trading view basic today. And tomorrow, you give us a screenshot on the chat box. That's the assignment today. Yesterday was the journal. So today is trading view. You must have trading view. All right. So go to your trading view because you want to check your setup before the market. You enter the market and then play your setup. So one thing I like to say is plan your trade and trade your plan. So while you're setting out on your plans, everything you want to do for the day, you visit your trading view. So NAS 100 is where we want to pitch our tent this morning. So we'll go to NAS 100 and make sure it's on FSCM broker. All right, FXCM broker. So click on it. This broker is very compatible with our trade locker. That is why we have it here. All right. So we have our NAS 100 already right here. Oh my God. It seems so many things have disappeared. Oh my God. All right, so let's go. Let's see how we can manage this. So once this is done, the next thing you would like to do is to bring in your indicators. About 2 indicators Rich Bandega recommended, all right? But those 2 indicators he recommended, they are right. One of them is Asian range, Nikkei 948, and the second one is London and New York Open. Those are the 2 indicators. But the one he really paid attention to is Asian range Nikkei 948. So Asian
Nico, what?
range Nikkei 948. So let's go to indicator and see it right here. London, London and New York Open by John Fibonacci. All right, make sure it's John Fibonacci, London and New York Open. That's the second one. Then the first one is Asian range by Nikkei 948. Right. So once you select that, I already have it here. So the next thing you want to do is to set it. And how do you set it? Just stay on it, then go to settings. This is the setting icon. Click on the setting icon, and then it opens up. First, be on the input. All right, the input, you want this to you want to peg this on 1 hour time frame. So click on 1 hour time frame, leave these sessions, all right? This session, excuse me, 7 p.m. to 1 a.m. is was it EST, Eastern Standard Time. You have to leave it that way, all right, because that's how it works better. So leave it that way. Don't bother to tamper with it. And if you don't have, you don't necessarily you need to have that time range on your own settings here. Like what the time range that is suitable with my own region here is UTC +1. But this Asian range, leave it the way it is. The only thing you have to ensure is that your show Asian session range on 1 hour time frame. So let that be checked, right? Make sure that is checked, and then you okay it. So the next thing you want to do, so once that is done, see what happens. See what happens. You're going to have this range. You're going to have that Asian range already set out this way. See it here, all right? The Asian range already set out for you right here. So this is how it's going to come out. Then if you want it shaded, you go to style, and on the style, all right, you give the the high, you give the high give it a shade, give the line that indicates the high, give it a shade, all right. You can see this, my shade, this color is compatible with this. That's what I used. And then the low, I gave it another color, so I'll be able to see what I want to see, all right. Then the shade now, give it a background, this background now. Then I put the background, I give it a color. So I'll be able to see the Asian range very, very well. So what you're looking at basically is that Asian range, and that is going to help you. So I'm going to be spelling out
Okay,
some
so
things that
when you have picked the indicators, where do you go to now click this one?
is style. I just go to style.
No,
All
what I'm
right.
saying is that when you have selected those indicators, where would you see them? So under indicators still. Whenever you want to use
Yeah.
them, you go under indicators. Okay.
Under indicators, look at this. So what pops up now? That's Asian range by Nico 948. I think you you actually you re-echoed this when I mentioned it. Asian range by Nico 948. Then you go for the settings. All right. This is the settings. You click on it. It comes up. First, check the input if it's in order. What do you want to check here? Leave it the way it is. 1 day session, 9:00 to 1 a.m. That's the Asian range. It's okay that way. And this is in Eastern Standard Time. That is UTC. Is it +1 or -1 there? So that is the way it will come. Leave it by default. Then you want to be very sure that it's on 1 hour time frame. So ensure this is checked. Ensure this is checked. And once that is done, of course, should have come out this way. See this line, tracing the high, and this line tracing the low, tracing the high and tracing the low. Look out for it. All right. If your screen is white and you're not seeing it clearly, change the color. Use the color for the high and the low so that you'll be able to see it, very clearly. You can change, you can walk around with the color. Then make sure to create a background for that to be able to see it well. You come here. This is where you actually put the color for the line tracing the high and the line tracing the low to give you your Asian range. And then the background is right here. You choose the color you want. You can just come here and choose the color you want. So once you've set up that, you're good. So go look at it on your chart and play with it. All right. So it's right here. Let's go to 1 hour. So we'll be able to see a lot of the Asian range or Asian ranges. We go to 1 hour time frame and we can see a whole lot of them. Oh my God. I mapped out several things and they have disappeared. It's crazy. Let's go, no problem. So, this is just forming right now. All right, this is another Asian range forming. And we'll see what we can do with this. So you can see this Asian range forming. This is another one forming, as formed. This is another one, another Asian range. You can just check them out, just to be sure that part is done with Asian range, Asian range. All right. If you can see the Asian range, please put 2 on the chat box. Put 2. I want to be sure you're tracking. You're tracking 2 on the chat box. If you can see the Asian range, put 2 on the chat box.
Hello,
right.
sir.
Okay.
Sorry. Hello, sir.
Just hold on. Don't worry. When I'm done, prepare your questions. Put it on the chat box. I don't like spending more than 1 hour. All right. So I can go do some stuff. I need to carry money out of this market. Put your questions on the chat box. I'll be responding. Then once I'm done, then you can take the mic. Okay. So Asian range, I've shown you all the Asian range. So let's go to the recent one so that we can do, some magic here. So, but before we get there, let's look
but
at
before you
some
go
back
far, can
testing.
you repeat this? Because this is a very important part of this thing. Can you just repeat it so that people can really grab it? That's what I want to say before you go far.
All right. So I'm showing you the Asian range. See my cursor right here. At least you saw the way I set it. Then I'm going to look at them. And why am I going backward? I'm back testing. Is it there? Is it there? Is it there? It's always there once you set it. All right. I will tell you how beautiful this is. Okay. So do we get it? Put 1 on the chat box. Don't leave the mic for me. Sorry, I'll give you the mic soon. So put 1 on the chat box if you get this now. All right. 1 on the chat box, just 1, not triple 1. Okay. All right, 2 persons put 1, so I'm fine. Means you got it. So I have all my Asian range. So now let's consider the 2 strategies that I expected to trade. The Liberty strategy. 2 strategies that Rich Van Dega recommended. Then I'm going to give you a bonus, right? You can give it a name, any name you want to give it. All right, but put E to it. Since my name, the spelling of my name starts with E. So see what's up here. Please get your notes. I won't be writing so much on the screen. So Rich Van Dega recommended, breakout model, and then fake out plus reversal model. Breakout model, fake out plus reversal model. So now on the breakout, let's see where breakout happens. So when you're looking at the Asian range now, all right, Asian range is, where the market starts ranging, as the name implies, where the market starts ranging, all right, where the market, accumulates, where the market is accumulating. So the indicators you're using help you to spot them out easily. That, okay, there's accumulation here. So get ready, there's accumulation here, get ready, there's accumulation here, get ready. That's all these get ready, get ready, get ready, get ready. All right. Those are where you are having accumulation. You can see this is more pronounced, a lot, very, steep accumulation right here. So you're getting set. So what do you want to do with this accumulation? You want to either trade breakouts or you want to trade fake out and reversal. You want to trade breakout or fake out and reversal. That's what you want to do with the Asian range now. So now, let me see if the next one, this does it. So I'm back testing for you to quickly see what this is about. So look at the Asian range right here. All right. And with the Asian range, see what happens. Right here with the breakout model, you watch out when the candle breaks above the next candle after the range, all right, after the accumulation, when it breaks above the last candle, that the high of the Asian range, once it breaks above the high of the Asian range and closes, and on the next one, you enter and pull the trigger. So, all right. So if you did that here, this is breakout you're trading. This is breakout model you're trading. And of course, it started a little pullback here, and then we go, pop. All right. So let's check how many pips. I'm going to be very practical here. All right. How many pips do we have here? So on the pips part, please, your pen, your journal. We talked about journal yesterday. How do you calculate that? How do you calculate the pips? All right. So for the pips, every 1 point represents 10 pips and represents 100 ticks. All right. So don't really break your head around the ticks. Just stay with every one price point represents 10 pips. So now let's check out the price points right now. Okay, so right here is the Asian high, right? Asian high. So we go, this is where we are entering from, right? The second candle, all right? We see what happens, see the emotions that plays out here on this candle. Went up, like the wick up is bigger than the wick below, so it shows some, some buying momentum there, and then it closes right here. And of course, as the next one is going to open, you're ready to pull the trigger. So let's say you pull the trigger right here. All right, you pull the trigger right here. That is 21,610. Let me just take 21,610, leave the fraction. Right, so someone calculate for me. All right, your calculator is there. It's a practical class, 610. Then we take it up to, all right, the next place, just right here is okay. Before that consolidation, all right, before that consolidation, or let's stop here. Let's take it up to this point. Up to this point, this is possible. This is very possible. So let's take it up to 21,799. Right, 21,799. Right, what do you have there? How many points do you have there? 189, right? So 189. So where one point represent 10 pips, how many pips is that? 1,890. All right. Is somebody chatting it? I'm gonna check that very soon. But I'm actually in the class with you today. We're working together. All right. So 1,890. So we have 1,890 times 10. Sorry, 1,089 times 10. Mistake here. Sorry, I'm coming. Yeah. 189 times 10. 189 times 10. So we have 1,890 pips, right? So that's what we got there. So the profit is going to be calculated around 1,890 pips. So what Rich Vandega recommended, Auntie Esther, if you're there, this is for you, based on your question yesterday. He recommended 1:4 risks to reward, right? 1:4 risks to reward. So if you're entering from here, you want to put your stop loss like 500 pips below. And 500 pips below is going to be like 50 points. So where is our 50 points from where we are entering from, which is 21608. Yeah. So where is going to be our stop loss? Stop loss. Let me check the chart. Who is responding? It's going to be 50 points below. So minus 50 from what now? Minus 50 from 21,608. What do you have? 50. All right. Thank you. Everybody responding. I love you with the love of the Lord. 21,610. All right. So our stop loss is going to be at 21,558. So let's go for 21,558. Right? So good. 21,558. All right. So that's it. So we put our stop loss at 21,558, and it's obvious. This is where this candle, all right, that broke the high started from. So you pitch it there and you're fine. You're expecting that no matter how it plays around, it won't reach there. And that happens when it was, when it reversed here, it didn't get there, though it was close to it, but it didn't get there. And then continues to move up, continue moving up. All right. So, but right here, it got there. All right. So, what I have to explain around this is that, yes, this is the beginning of this candle. I would like that, though he said 500 pips for your stop loss, please take it a bit with what you're saying, trade what you're saying, actually. Take it a bit, below this candle that broke the high, a bit below. All right, very small below. Maybe we go for 21,539. So if this has come down, likely it wouldn't have broken it. All right, but all things being equal, this is another thing he mentioned. He mentioned, trade management, break even, trailing stop. So you watch out for your trailing stop at 1:1. That means if you're looking out for 50% below, look out for 50% above. Do you track me? If you track me, put 2 on the chat box. So if you look out for 50%, 50 points below. All right, look out for 50 points above to break even. All right, so if we've entered from here and we look at 21,608, 50% above, where is that for us to place our break even? Where do we place our break even? All right, 50% above. Anybody? 50% above. Where are we going to place our break even? Because we are trailing stop. So our break even is going to be where? Because no losing. Nobody is going to lose on this market, but we are going to make too much profits. All right, as somebody charted that. Okay, so 21,558. No. Okay, 21,658. So 21,658. So we have that there. So if you have done your trailing stop somewhere there, it would have come to hit your break even and you're in profit. So you just traded that on a 1:1. All right. So Auntie Esther, I would like a response from you. Do you get the idea of 1:1, 1:4 risk to reward ratio? All right. So once Auntie Esther can understand, my objective is met, I'm done. I know Auntie Dupsy will mark me though. All right. So if Auntie Esther gets that part, she asked that question yesterday, then I'm good. So watch out for that. 50 points below, 50 points above to quickly go break even. And by the time you break even there, you do your break even and it's still going in your direction. Just be ready to be doing 50% trailing stop. All right. It has passed the first target, is going for the second 50%, go for it. All right. Be trailing stop. But those other ones, my own idea, I might probably reduce that one to maybe 20 points. That's my own idea actually. So that when it comes back, it might still go my direction or so. But if you're comfortable with, but the first one, make sure you secure that 50%. Then subsequent one, then you know how to do your trailing stop. So when I say trailing stop, it's just you adjusting your stop loss. Simple. Adjusting your stop loss to secure your profit. That's what I mean. So right here would have been stopped out, but would have secured on a one-on-one risk to reward ratio. So this is on breakout. All right. If you get the breakout, please put 2 on the chat box. If you got the breakout strategy, put 2 on the chat box. All right. So if you get the breakout, all right, put 2 on the chat box, everyone. All right. So I'm going to take a trade, and by the time we take a trade, we'll see how we can do that. But the market might not move that fast, so just try. I've done a lot of things on break even. like a whole lot. If you even check expansion for as regard that break-even thing, you will see a lot of break-even trailing stop. I did some videos there. Just watch it and you will understand break-even trailing stop. So I'm done with this. I've taken this. Let's say I was on this trade, I would have taken 1:1 risk to reward, and it's okay. I've made profit there. So let's go look for fake outs and reversal. Fake out and reversal. So we've seen break even. That's on back testing. Fake out and reversal. I really wish those things I marked did not disappear. All right, no problem. Let's see what happens. Fake out and reversal. All right, this is still on breakout. This is breakout to the sell side. All right, this is fake out to the, all right, to the sell side. So you can see this now, broke out, right? And then right here, might still be taking it easy because it's still consolidating. And right here, when it did like, 50% of this, you're already sure that something good might happen. If I should enter this trade, I will likely enter this trade, somewhere from here. All right, somewhere from here and take it all the way from 22610 down to at least, okay, right here is still sustain it. This is massive actually. This is very, very massive. So I would have taken it down to 22413, and that is a whole lot. So what Rich recommend, your stop loss 50 points, that's 500 pips. Then your take profit, target it up to about what now, 2000 pips. 2000 pips is 200 points. It's 200 points. So check for 200, the difference of 200 in between. That's why we say, NAS is paying big and all that, because what you can secure in profit is always very massive, yeah. And of course, what you can secure in losses is also very massive if you don't understand, what you're looking at on the chart. All right. So what I would like to point out to us on this Liberty strategy, please go with all your arsenal. Go with all your arsenal. Don't limit yourself to breakouts, fake out, reversal. Bring in your supply and demand. Bring in your fair value gap. All right. So do those research and go in with all those arsenal. All right. So we've seen breakouts for the buy side and for the sell side. Then let's see where we have fake outs. Where do we have fake outs? All right, okay. So this is a whole lot of fake outs. It's too much. It's much. So this would have given us good profits there. Let me see where I have fake outs. I think that was Friday. If I'm not mistaken. Let me check. This is today now. All right. So you see what this candle did now. The wick already has gone past the high, the Asian high. It has gone past the new Asian high. Say again. It has gone past the new Asian high. Let's see what happens here. So I'm expecting a fake out here. Okay, but before then, let's come to this side. Let me look at this on 5-minute time frame. 5-minute time frame. So if you're tracking me, please put fake out. That's where we are going right now. I need fake out. Put fake out. So once you say fake out, we'll see it. So on fake out, that's just the market trying to trick you. All right. All right. So let me bring in, okay, the market trying to trick you. Let me leave this side. Let's see what happens here. There is that. Let's go to 5 minutes. I saw a gap somewhere. No, 5 minutes, where are you? . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . 5 minutes. Okay. Okay, I think I got the fake out right here. So I'll be going, let's look at this fake out. You see what it's doing right here, the Asian low. So right here, we are looking out for the Asian low. We are looking out for the range and the consolidation that the indicator has been able to map out for us, and we're looking at it. So we're expecting that, okay, it's going to break out here and it will continue, breakout and continuation. It will break out and continue, but it broke out, right? The candle broke out here and pull back. And before you know, there was a shift in direction. There was a change of character. Broke out, pull back, and came back to this point, and then went above it, went above this resistance zone, went above it, right? Or went above this high that was created here. You can see this, all of this now. You can see a lot of consolidation here. So normally you'll be thinking it's not going to really do that, but it did it. So that's to say that what happens between here, let me bring my, okay. So what happened right here is a fake out. What happened right here is a fake out, because by what you're seeing here, you're expecting that this market is going to sell. It's going to sell, but before you know it, pulled back and then changes direction. So this is simply a fake out right here. So the fake out and reversal model. So watch out for fake out and watch out for reversal. So the reversal, if you want to target this, you would have probably been targeting, as it does this, you would have been targeting, okay, maybe to come back to the Asian high and then you're done with your profit. So if you're entering from here, from right here, where it broke, this consolidation here, these are alternative points here. Once you broke it, you're expecting that it's going to do the reversal. And of course, it does the reversal. So if you're entering this market, let's say you enter from here, this candle, this one right here, you enter from this candle, and then you take your stop loss from this point. Where are we? 22,840. 22,840. You can bring it down to this point, 22,832. 22,840 to 22,832. It's more safer for me that way, right? But if you want to go by that 50 points, which is 500 pips, you just look for, if you enter somewhere around here, just look for that. Just check your 50 points below to put your stop loss. So let's see the high, right? So let's see. All right. Just put it somewhere here. And let's go. All right, where should my 50 points be if I'm entering from 22,840, so I can adjust my stop? Where should it be? Any response? 50 points below on our fake out strategy, fake out reversal, 22,790. 22,790. Is it 22,790 from 22,840? That's too much. Okay, 790. That's true. That's true. 790. Where are you now? Okay, so we are still good. 790. Okay, 790. All right, so even if you leave it somewhere here, you're still fine. All right, you're still fine. So this makes you enjoy more risk to reward ratio. All right, see what I was even talking about. For me, I'll leave it here, and I'm going to enjoy more risk to reward ratio. All right, so it's not like what our expert has taught us is not cast on stone. In as much as you understand how to look at the previous high or the previous low to put your stop loss, you can work with that still. So for me, I'll put it here, and it makes me enjoy more risk to reward, ratio. And I'm sure Rich Vandega is going to be happy with me if I can reduce my loss. If I can reduce my loss. So where is our 200 point from 22,840? From 22,840, our 200 point is going to be where? 200 point from 22,840. Just add 200 to 22,840. What do you have? All right. Is anybody typing it? Anyone typing it? All right. So, anybody typing it? Okay, 23,040. So it's going to be, you're looking for a long one there. Take this away and let's go. Let me see that again. So this 23,040. So I come here and let's go for it. All right, you just draw it up there and you're expecting your price to do that. So, but all things being equal, with being able to reduce my, my loss, my stop, my risk, being able to reduce my risk because of the way I enter, I should have been very, very okay with this. And so when I got to 22,911, is enough profit. It's really enough profit for me to go home with. So that is fake out playing out right there. Fake out playing out right there. So the bonus I'm going to give us right now is, like I told us, deploy all you know. Deploy all you know to this market. Don't limit yourself to the breakout and fake out reversal. No, watch out for technicalities. Watch out for technical analysis as well. And you will see how that is going to serve you. So before I hopped in on this call, I just look at what the market is doing, look at what the market is doing. And I was trying to see what can I do with what the market is doing right now. So see what happens here. See what, even right inside the Asian low. All right. On 5 minutes, let me see this on 1 minute. Let me see this on 1 minute. How did it play out? Where did I see that again? Okay. Okay, see what the market is doing right here. What I would like to do here, the market is actually ranging within the range, within this Asian range. With the way it's actually not ready to break out or fake out or something, deploy all you know. I'll just deploy my trend line, Shikena. I'll deploy my trend line. Okay, maybe I should apply this on 5 minutes. Yoruba do say, so as the market is trying to be smart, you have to be smarter. You have to be smarter. So I deploy my, no. Yeah, I deploy my what now? My trend line, and I try to bring in, okay, this is too stiff. Let me aim for another. All right. All right. So this gives me my point here. This gives me my point. So you see that you're doing me, was it a higher high, a higher low, higher high, higher low, and I know what you're doing and kill you from there. All right. Or you come to break my trend line and I catch you on the other side. So I can take advantage of the range. All right, that's bonus. That's bonus. All right, that's bonus on Liberty strategy. So I can take advantage of this range that the market is trying to act smart here. I can take advantage of this range, or you just stick to what Rich Bandega talks about, which is wait for your breakout or wait for your fake out, and then wait when that happens. That happens. But you know all this, the more knowledge you have, the more it is easy for you to be able to spot opportunities on the market. So I just keep this there and let it be watching that Asian range for me. Right? I did this, I did some back testing and I put a lot of that and it happened. All right. So, but when I changed, did NAS 100 again, it disappeared. It pains me so much that I couldn't show you those things when I did it and it all happened. All right. So let me go to something I spotted on Friday. When it's Friday? Friday is what date now? Today is 15, 14, 13, 12. That was 10. Let me check what happened on Friday. There was a gap I saw. And that gap, the way that gap worked out was beautiful. On 15 minutes, I saw it. Oh, yes. I think I've seen what I'm looking for. All right, leave my screen. Sorry, my screen is freezing. Hold on a bit. Once I show you that I'm done, then you can, I'll receive your question. Hello, come on. All right, it's back now. $15 minutes. Please get ready with your questions. I just want to show you that. I've shown you how you can add your trend line and also use that to watch what is happening. In case you want to pick opportunity within that range, it's possible. All right. $15 minutes. All right. I hope it comes up now. TradingView is acting up. It wants me to subscribe. Maybe I'll do that today.
It is
All right. So right here.
Okay, you found it. Okay.
Okay, is it? Yeah. Sorry, hold on a sec. Let me just get that. What I did here. Okay. All right. So I actually did something here. If you can see this, I don't know if you can see it. All right. All right. You can see the trend line I deployed here. All right. So it was going up, and I deployed the trend line. All right, right here to watch what is going. That's not actually what I wanted to bring out. It was a gap. I saw a gap. Don't worry, when I checked and see it again, I'm going to post it on the group. I saw a gap, and that gap did something else. I would have loved to show us that, what that gap did. Would have loved to show us that. So bottom line, as I'm rounding off right now, what you watch out for on this Liberty strategy, watch out for the ranging market, and your indicator is going to show you the range. Once you apply that indicator, watch out for the ranging market. That is, so you're more or less trading. Rich Van Deger says trade breakout, fake out, and reversal, which I've shown you breakout and continuation, then fake out and reversal. Note that breakout, continuation, fake out, reversal, those two strategies. All right. So to summarize that now, just sometimes you might need to check out for, all right, you check out for accumulation, you check out for manipulations, all right, and then you enter the market. That is you bringing SMC where we came from. Where we came from, that's you bringing it in. So I'm going to pause here. Maybe when next time we are talking about this strategy, then that's the new thing I discovered, and it works excellently well. Checking out for accumulation, which is the range. This range is accumulation. Then checking out from where it started from, where the accumulation started from, watch it tap into it again, the fair value gap or the gap. As it tapped into it again, then it went the direction it was intended to go before. All right, so that too is another point to look at. I'm just saying, aha, I think, is it right here? I saw it. All right, no problem. Just let's pause here. Once I see that, I'll put it on the group. So stick to the breakout continuation, fake out reversal, then expect the what's it now? The accumulation, retesting the fair value gap, and then going the direction it was intended to go. I'm going to post that on the group. So that is the additional thing I want to add to us, to the knowledge today, and introducing the trend line to also monitor what the price is doing. In case it's doing what it's doing right now, it's actually ranging within the range. Imagine the market ranging within the range. So you can also watch out for that. All right. I think I see it now. Okay, look at what happens here now. Beautiful. I've seen it. So right here, see what happens within the range. All right. It goes up, and there is a fair value gap here. Fair value gap is right here. This will give you an idea of what I'm talking about. So there's a fair value gap here. All right. And then it's reversing. As it's reversing, it taps into this fair value gap and then bounced and went back up. All right. So even within this, as it's reversing and taps into this fair value gap, went back up. Right here, if you enter, you would have secured some good pips from here up onto this point. So beautiful. I think I spotted it now. So from 22,930, you would have secured some good profits up onto this point. So sometimes accumulation, when it's accumulating and it does fake out, watch out if that fake out, there is a fair value gap somewhere down there. It might respect the fair value gap and then go up. And if it's also, to the south side, all right, that is accumulating and then is doing a pullback, watch out if there's a fair value gap there. It might tap into the fair value gap and come back down. Right, I got it. So that's the bonus I was going to add to it. Thank you very much. If you got value, put value as I hand it over to Mama and to Doopsy. Thank you very much. And Dr. Love, please take it away. If you got value, put value on the chat box.
Wow.
Of course, people have questions now. So you go finish your work. Yes, Mama, continue.
Awesome. So much value. I want to thank Mr. Ezekiel and his team, Dr. O, Sister Esther, and all of you. It's a job well done. In fact, I sent a message. I said your team has done a great job. Dr. Love, You know, I don't like to wait for people. Anybody that didn't join early, you missed. And then if you don't join early again tomorrow, you will miss. Thank you for that, letting them know that I will say you are harsh. You are not harsh on this one, no. You are very sweet. So I hear you. But Mr. Ezekiel, I deeply appreciate it. It's unfortunate all your mapped out sessions went off. Maybe when they call your team back again, if people have gone to do your assignment, you need to like, I was in my head, I'm like, this guy don't study these things, so you want to say everything at at the same time. So I would appreciate it if next time you slow down on point by point, because this strategy is key for any kind of trade. And guys, listen, don't go and put your hands on NAS because Ezekiel has done NAS. So if you do not understand this break of structure, please careful with NAS. I love to trade NAS. It's bam like this. I get my money, I leave the market. But you have to understand this can also apply to other strategies. And you will hear them. Brent Badel is no longer here. He used to tell you 20 up, 20 down, 20 pips up in profit, 20 pips down in stop loss. But trust me, if you don't know it, before you go hit your 20 pips, you know go know. So please go and practice this very, very well before you can dare to do NAS. Dare to do NAS, I say. You are still doing gold. It's very volatile. Then you want to go to NAS. You don't understand. You just say, after all, Ezekiel said, don't blame it on alcohol. Don't blame it on Ezekiel. This fair value gap you just talked about, I was literally waiting. I saw it before. I didn't know what you wanted to do. I was literally waiting for it. You on your own self, your phone can show you this. It's just that you need to know how to interpret it. And so, Mr. Ezekiel, I thank you for going around everything, fake out, break out, ranging. You see, these are very key. Dr. Love, I don't know if you have plans for candle formation, because this particular trade he used, all the candles are speaking. Look at the hammer, look at the engulfing candles and all of those ones, so that people can properly apply what he has done. Because what is key to Liberty strategy is your ability to understand your wick and your candles. Then you will know. Like he told you now, if I was the one, I would jump in at this market. I started laughing at Arabella and JRS. Arabella will enter from this zone, this fair guy. Once you just near the zone, I thought she will enter. JRS will wait for the next candle before he will enter. That's basically what Ezekiel has taught us. So please, let's pay attention. I'm super proud and I love this. Thankful to everyone that joined and will join. So you see, we reached 53 today. Yesterday we were 48. We have increased the number. So tell everybody to tell everybody that we are not just here anymore to network or to just say we're waiting for trade call. From this one, and many of us should be able to take a trade on our own by tomorrow, whether on NAS or on gold or any currency pair. That's what I wanted to add. Thank you so much. So Ezekiel, you may come back to explain the formation of the fair, this gap. You understand?
Yes,
Actually, when your trade gets to anywhere around this zone, it's possible to move, but it doesn't have to get right in. So if it gets to the beginning of the red of the rectangle on top, you see where his line is right now. If your trade gets to somewhere here at all, there's the possibility of bouncing, but it doesn't have to enter unless it broke the structure like you can see here. I'm not looking at value, but at the big candle, it formed again and broke it down before it started going back. So sometimes, sorry, I'm using my cursor. Ezekiel, please enter the fair value gap for me. Okay, so you see the top part, that first, yes, the trade can get to that part and bounce back and start to go up. So don't say Ezekiel said, the only way it will enter inside the line properly is if it breaks you see where his cursor is now, this was the first line. If the market broke it like it did, it went down again before it started bouncing around. But what we're trying to tell you is that anywhere around this zone, the market is possible to bounce back. So if you're one of those people that scalp, you have mapped out your gap, your wherever it is, wait. Once you reach this first one, watch out, take your money and wait. If you are a scalper, wait. Don't want to let it get to the down. You are okay like that. Wait for this, his reversal Once it gets to this gap, it will reverse. That way, you stop selling, collect your money, wait for the turn or the reversal, start to make money on the upward trend. And then I think Dr. O later, or both any one of you can come and talk on how to hold your market. Sometimes you have made to say, no, it's going to do this, and you jump out. Can you hold your market to the next level? Thank you very much, Dr. Love, Mr. Zika, and your team. Job well done. Since yesterday, you guys have been busting head. Thank you so much.
Okay, thank you, Ezekiel. Do we have questions? Let people ask. If you have questions, please, question time, lesson time. You don't understand, though. Ezekiel can repeat class, though. Even though we are going to get this video out, so you watch over and over, because this one is watching over and over.
And Dr. Love, I know, Ezekiel, I know you've done how to break even over and over and over. Please, like Dr. Love said, you might come back, because if you know how to break even with this liberty strategy, you will be good to go. Not just coming to put trade stop sometimes will knock you off, but if you know how to break even by yourself, you set it already, you definitely always live in profits before you get there. So please, I like the question. Use this opportunity to talk about break even, to explain it to new members, not just new members. Not every old members can actually. I know it's boring to be repeating the same thing, but you want to achieve objective from what you have done. You need to teach the what do they call it? Break even is very key. So when you say break even or break even, people don't know what to do. Before you go take your cursor, come and go to panel and start to do it, market don't pass water. Just my suggestion. Thank you, Dr. Love.
Okay, sir. Okay, Mama. Okay, Ezekiel, you take break even, but let's ask other questions. Do you have other questions so that Ezekiel can take all of them together? Okay, Placid said, what is fair value gap? Put all your questions on the chat box.
Okay.
So that Ezekiel can take these questions before we go. Okay, Ezekiel. So what is fair value gap? What is imbalance? Where will I know when it's imbalance? And then break even.
God. Okay. Well, that aspect I brought in. So just know this thing little by little. Don't try to know everything in one day. All right. So when you see this candle, all right, when you see this impulsive buy, all right, as it flies from here down, up here, this bullish, full-bodied candle is already giving you an impulsive buy, and that is creating an imbalance right there. All right. So wherever you see the week, this week here, this what now? This order block, all right, where that rally started from, where this impulse buy started from, this is order block. So this week here, from this week up to the week of this one, gives you a gap. All right, creates a gap for you, and that gap is called fair value gap. All right, is within the imbalance. So this fair value gap is within the imbalance, which is that impulse buy. Oh, that's massive rally that just fly up like that. All right, so if you peck it, oh yeah, it's right here. I was considering the what now? The volume. I was looking at the volume. So if you peck it right here, this is the perfect, mapping out of the fair value gap. So if you peck it right here, you have your fair value gap, and you're on a lookout for what is going to happen. So it's either what's it now? The reversal is going to tap into it and react back up, or it will play within 50% of this fair value gap or this imbalance. It could play 50% of it, like what it did right now. All right. So if it does that, it reacts. So watch out for tapping, watch out for 50%, and watch out for the bounce back. Take your profits. All right. Hope that point is clear, and that is very germane. Don't forget it. whatever thing you can do to keep that on your mind is good. All right. So on the break even is just those mathematics you were doing. All right. You just be adjusting your stop loss for break even. So break even, don't worry. Let's see, whoever is taking the class tomorrow, I will just borrow 5 minutes to do break even. All right. So just like we calculated 50 points, disappeared. Like we calculated 50 points to pick our stop loss, and then that stop loss is what you'll be at.
Network, don't look at how to. Network has thrown him out. He will be back with us. Okay, so before Ezekiel comes back, let's talk about tomorrow. Tomorrow we have Wednesday class. Who are the people for Wednesday? Is it them, right?
Yes, Eden, Margaret, PP, Precious, and I think two other persons.
Okay, so you guys will quit Liberty Strategy for us. You will teach you your own way too. So I can go back. Everybody go back. I will try and drop this video. I'll try and drop this video. I will also copy it and send to all the trainers in case you want to put it on your YouTube, because man, I'll try and drop the video. So let's all go back. This is quite interesting. And it can even help us, Richie said some people have said they do it with other peers. And just like Antidope said now, that you can do it with gold, we can do it with other peers as well. So let's really study this. I think this can really help us, you can just enter the market and take your trade. So
just to add, okay, sorry, 1 minute, ma. Just to add, buttress what Ezekiel said on that gap is a fair value gap, and it also happens like in other currency pairs. It also happens at the opening of a market. So just watch out, like in gold on Sunday night, when gold opened, it created a similar gap. And when that kind of gap happens, market will always come back to fill that gap before it goes its own direction. Just to add that. Thank you. Okay. Ezekiel is back.
So tomorrow, when you are teaching, you use your English. I always like people, they use their own language.
Hold on, Dr. Love.
Okay,
boss
is here.
Mr. Eden, well done.
How come, sir?
Okay, so let me add something to what Mr. Eden just said. Yes, market will come back to fill that gap, but it's not every time that it comes back immediately. At times, it will come back instantly to fill it. At times, it might take a day or 2 days. So don't conclude that. So you don't see a gap in the market and you just place order based on just the gap, expecting that the market must come back to fill it. Market will come to fill it, but it's not every time that it fills instantly. Sometimes it will take a longer period of time to fill. So let's have that at the back of our mind, so that when we're taking a trade, based on that, we know that, okay, fine, yes, market will come back, but it might not be now. So we don't just trade with that confirmation. Okay, so let me give you an example of what happened to me. I think whether that was last week or so. I saw a fair value gap. So I said, this fair value gap, market should go back and fill it. And I took a buy. And price continues selling throughout that place, and I hit my stop loss. It took over 5 hours or 6 hours for price to now come back to fill that fair value gap. So are you seeing all of that? So that we don't just conclude that immediately there's a gap in the market, price must come back to fill it. Price will come back to fill it, but you don't know when. So how do you play safe? Look for other confirmations. Don't just run with only that one. That's just what I say to chip in.
Thank you very much. I remain very loyal.
So maybe some other time we will teach gap. What Mr. Adam is talking about is gap. There's gap, there's fair value gap. There are two different things. So We'll talk about another day. We'll talk about gap, how to trade bullish gap, bearish gap, and then we'll differentiate it from fair value gap. So not today, I beg. Thank you so much, my mentor. I celebrate you, sir. Dr. Law, over to you, ma. Sorry, ma.
Okay, so I was saying that idem would okay, let me not make this longer than it is. Let's stop recording.